This morning. It's so great to have you all with us as we host our final Tuesdays at 10 a.m. with Title for the month of March. Our final topic for this month is the mysterious and alluring world of title insurance, an agent's guide to understanding it all. Now, we could actually talk for days about title insurance, but I wanted to highlight some things that it might be really handy for you as an agent to understand about title insurance. If you're an experienced agent, you likely already know quite a bit about title, and maybe it's affected you personally as you've purchased homes or rental properties throughout your career. If you're a newer agent, you might be wondering, what the heck does it all mean? Hopefully, we will shed some light on some of these mysteries. And if you have questions at any time, please let us know. And we're going to be here for you even after the webinar is over to make sure that your questions and concerns are answered. And one of our goals too here at Watermark is to make sure that you as an agent have the proper education on all things title to make sure that you can convey the different nuances of that to your clients. So without further ado, let's get started. Yeah, just give me one moment. Here we go. So we're going to talk about what exactly is title insurance anyway. Well, if you've been a realtor for any amount of time, and of course you've taken actually you might not remember, but when you took your real estate exam, there were a bunch of questions on there about ownership rights to property. And one of the things we're going to discuss is your bundle of rights as an owner of a property. That's your title to the property. The way that you own a property is your title. And the title insurance that we issue at the closing table protects your rights to that home, to that property. So your settlement company will search and clear and insure the title to the home before you buy it. Your owner's title policy will offer you protection for those property rights for as long as you and possibly your heirs own that property. If your ownership of that property ever comes into question, the title insurance policy will protect you against expensive legal problems that could result in the loss of your home. And we'll talk more about that in just a moment. So we want to know, how does title insurance work? Well, as a property changes hands and creates what we call a chain of title, where different owners take possession of those premises throughout the years and decades, sometimes mistakes and irregularities occur. And these are often made long before you ever expressed an interest in the property. This can place your ownership into dispute. So a seller might have fraudulently claimed to be the sole owner of the property. A seller might have avoided disclosing that they used the property as collateral on a private loan. They might have simply just failed to pay their real estate taxes too. So even a simple mistake in the recording of legal documents at the county courthouse, or even improper execution of legal instruments, or the reappearance of undisclosed or missing heirs in the chain of title, could result in the loss of your home. Title insurance will protect you against the financial loss associated with these issues and many more. So why buy title insurance? Well, let's look at some real life incidents that have occurred. And actually, some litigation for these incidents is still ongoing. So we have this picture. This is a swimming pool in Orlando, Florida, that now encroaches on a neighbor's lot. And you can see that the owner of the encroached upon lot has put up a fence right down the middle of that swimming pool. This was at one time 2 separately deeded lots that were owned by the same owner. And that owner put a swimming pool in on the property. Because the same person owned both of the lots, the city approved the plans for the pool that spilled over into the other lot, as you can see. However, problems arose when that owner lost both of the lots to foreclosure in 2015. So the lots were then sold to different owners. Oops. So you have here a situation where the owner of the quote unquote vacant lot that has the small portion of the swimming pool found out, unfortunately, that the city of Orlando would not let them build a house on their lot because now their lot is too small. The setbacks are too large and it's not enough room for them to put a house on their lot, which would be to the left of the picture. So here's another view of the issue. You see that there's a pool house here where the fence is going right down the middle. There's a garage on the other side of that. The garage is now rendered unusable because of the title issues. So in this instance, I would say title insurance is looking pretty good right now. Title insurance could actually help out and resolve this issue through a variety of means that the title insurer would have at their disposal. So yeah, that's one of the more extreme examples I've seen. Let's go back and take a look at that pool again. Yeah, that's pretty out there. Here's another example. Title insurance can also protect you from out of control neighbors. So this is a half of a garage near the small town of Dover Foxcroft, Maine, that was cut in half by a neighbor with a Sawzall who mistakenly believed that this garage was encroaching on his property, which he said and stated was to the left of the yellow tape. It was later found that this neighbor was grossly misinformed about the actual boundary line for his property, which was found to be to the left of this new fence that just went up. So naturally, you can imagine that the owner of this garage is suing. When I first learned about this case, I could not stop laughing. But here's another view of that same garage. As you can see, it's quite the spectacle. The true boundary is actually where this retaining wall is located. Litigation on this matter is not yet finished, and it's been pushed back several times due to the COVID backlog in the Bangor, Maine court system. But here is a definite, I posed the rhetorical question. So do your clients need title insurance? Yes, because you never know what your neighbors are going to do. So, and because this is stemming from a boundary dispute, title insurance will definitely come into play. If the owner of the property with the garage has title insurance, he'll be in good shape. Because it was stemming from a boundary issue here. And this is a more extreme example, but again, this is real life. This is actually happening. So the one thing I want to point out to you guys is that title insurance is very important, and you don't want your client to be a news item on the nightly news. So here's another clip. There was a buyer in Washington, D.C. who was stuck with nearly a $10,000 special assessment on her property tax bill because she actually waived title and coverage at the closing table and said she didn't want it. This home buyer had purchased a property that was an estate. The owner had died about a year and a half prior to closing, and that owner had been receiving a special senior citizen tax abatement in Washington, D.C. So after the sale finally went through, and the recorder of deeds in DC had notified the taxing authority, they retroactively applied the regular tax rate to that property, which resulted in a special assessment to this home buyer of nearly $10,000. Now, because it would have been an undisclosed tax abatement, an owner's title policy would have covered this special assessment for our buyer, but because she declined a policy, she had no recourse in getting anyone to assist her in dealing with this, and she was required to pay it. So, you have to be very, very careful, again, with declining coverage at the closing table. Again, can't stress it enough, title insurance will protect your client from financial loss or ruin from any issues that would affect their ownership rights. And again, don't let your client become a news story on TV or a case file for a webinar like this. So reasons to buy title insurance. Obviously, as agents, we know that it protects their largest investment of the client's life, okay? You insure everything else that's valuable to you in life. Your car, even your pets have insurance nowadays. So why wouldn't you have title insurance for the home? If obviously, title insurance reduces your risk. There might be hidden issues that crop up after closing in spite of the careful due diligence of your settlement company. There sometimes are things that are hidden from view that don't become an issue until years down the road. Also, you really can't beat the value that title insurance provides. And the reason I say that is because your title insurance premium is a once and done premium. Once you pay it at closing, you never pay it again. Unlike your car insurance that you pay yearly, or your pet insurance, which you have to pay also, of course, from year to year. Title insurance typically costs less than 0.5% of the purchase price of a home. So again, it's a super value for as long as you own the property. Obviously, the title insurance policy would cover you as a homeowner. It covers your client. It protects your property rights in the property, as we've said before. Nothing compares to title insurance as a value. The homeowner's insurance and home warranties protect only the structure that's on the land and the belongings of your home. So getting title insurance actually ensures your family's property rights for years to come. 8 in 10 home buyers agree that title insurance is a great idea. Nationwide, approximately 80% of America's home buyers do choose to get title insurance. And I can't stress enough what a good idea that is. And then finally, peace of mind. If you're buying a home or you're helping your client buy a home, title insurance will let you rest assured knowing that any future claim issues will be covered. And as a realtor also, you honestly do have a fiduciary duty to your clients, which extends to what I call the care and consideration of your client's financial picture when purchasing a property. I think that you should always recommend title insurance to them to protect them so that horror stories don't become a reality for your client down the road. There's very few people that can absorb a financial loss like the ones that we saw on the prior slides. So this is really important for you, again, to recommend this to your client. So how much does title insurance actually cost in Pennsylvania? Well, rates are actually set by the Title Insurance Rating Bureau of Pennsylvania, and the acronym for that is TIRBOP. Title insurance is highly regulated. Settlement companies just don't make up their own rates. We are a very regulated industry. Now, settlement companies like Watermark, if you've ever wondered about this, we make money by providing title insurance at closing. Now, part of the title premium or the fee that the client pays at closing for their title insurance policy actually goes to the settlement company, and then part of it goes to the underwriter to directly insure the property rights in that property. Title insurance in Pennsylvania and Maryland is almost always paid by the buyer. And I want to share something with you. This is actually negotiable. Title insurance could technically be split between the buyer and the seller, or it could be completely paid by the seller on the buyer's behalf. It's very common in short sales, for example, for the seller side to pay the buyer's title insurance. So as an agent, you need to realize this information could very much assist your buyer clients greatly in our next buyer's market, which will inevitably come. It might be a few years from now, guys, but just keep this in mind. If you get a situation where there's too many houses for sale and there's not enough buyers, that could result in sellers willing to pay everything for your buyer. So please keep this in mind. And this is a pro tip. Don't be afraid to negotiate everything for your clients, including transfer taxes, but that is a discussion for another day. And we can talk about that at length, of course, if you wish. Now, so what is an underwriter? Who or what is that? So Watermark would actually be your settlement company handling the closing. We're investigating the title to the property. We're making sure that we have clear title and doing all the behind the scenes things that are necessary to get to a clean closing. So the underwriter is the insurer itself. The underwriter is the entity that's providing the financial power behind your title policy. Examples would be Fidelity, First American, Westcor, Old Republic, Conestoga, and so on. You may have heard of several of these underwriters. So Watermark is currently an agent for Fidelity and for First American. And we are going to be adding Westcor as an underwriter in the near future. And interestingly enough, Westcor is the only major underwriter who's currently insuring title for marijuana dispensaries nationwide. As you know, marijuana is still considered to be a federally controlled substance, even in spite of the fact that many states are liberalizing their cannabis laws. But Westcor is the only underwriter who will take those properties that are going to be used for a dispensary and actually insuring them. All of the other underwriters who tend to be very conservative are shying away from that, citing federal regulations. But since Westcor is a privately held company, they have a lot more leeway in what they choose to underwrite. So just interesting. So there's two kinds of owner's title policies. You have the standard and you have the enhanced. And in our practice at Watermark, we default to the enhanced, and I'm going to explain why that is, okay? So a standard title policy for an owner is going to cover a third party claiming interest in title, improperly executed documents, defective recording issues, undisclosed covenants that may restrict the usage of a property for our client, unmarketable title where the property is unsellable because there are outstanding liens that were never paid or folks that never signed off on their interest in the land. Old liens that are placed on your title because of old mortgages, judgments, or other kinds of liens. So an enhanced policy will cover all of these things, of course, plus a whole other slew of things. It'll cover mechanics liens, the construction liens that, especially for new construction, forced removal of a structure due to encroachment. That would be, for example, maybe our swimming pool that we saw in the first few slides of this presentation. Unrecorded easements, building permit violations, paying rent on behalf of the client for substitute land or substitute facilities while maybe usage issues are worked out. It would cover maps not being consistent with the legal description. It would also cover a covenant violation resulting in reversion. Now, what do I mean by that? So pretend that you buy maybe an old church on a plot of land somewhere. And this old church, you're planning to convert it into a daycare maybe, or a condominium or something like that. Well, you have to be very careful that the old deeds for this church property don't contain any language that states that if it's ever used for anything other than a religious facility or religious grounds, the title could revert back to a prior owner. So you don't want that to happen. So we need to make sure that there's no reversion issues in title. An enhanced policy costs about 10% more than a standard policy, but it gives you such amazing coverage. It gives you post-policy coverage on a lot of issues. Normally, a title policy will cover you up to the moment of closing, so that anything that happened in the past, you are covered. Well, an enhanced policy will also cover some future violations as well, which makes it so amazing. It can cover violations of building setbacks for new buildings that you're putting up. Maybe you're going to construct a garage after you become the owner and you've accidentally gone over your property line. It covers access to land. This is a very important issue. We're seeing a lot more situations where lenders are very hesitant to loan money on some lands that have a private driveway. They increasingly want to see driveway agreements or maintenance agreements to handle a private roadway to make sure that a property won't become landlocked with no access to it. Your policy will cover post-policy forgery, post-policy encroachment, which means that another structure maybe is on your land, for example. Mineral damage from maybe some fracking issues. Any clouds on the title after you become the owner. Boundary walls, fence issues. And this enhanced policy will also provide protection for your heirs. Your heirs will not need to get a new policy. They can just use the existing one and keep that in force. So again, enhanced policy, amazing item. So this is an example that I often use when trying to describe why enhanced coverage is so important. At no point in the title process, okay, can Watermark Land Transfer ever be aware that a prior owner did some illegal work to a property without a permit, without a building permit, okay? So pretend that a prior owner added a bathroom in the basement and they didn't get the proper permits to put that in, okay? Maybe it's a gorgeous bathroom. It really adds a lot of value to the property by having it there. However, technically by statute, if the township or the borough would find out about this illegal basement bathroom, they are well within their rights to make you rip it out if you're the current owner. So who or what now is going to compensate you as the owner for the loss in value to your property because you had to rip out this nice bathroom? The answer is your enhanced title policy will kick in and cover that. So again, a great example of why enhanced coverage is so important. Now,
Hey, Gary Lynn,
Albert, go ahead.
that enhanced, for instance, on that bathroom and that, does that enhanced coverage also cover a contractor to come in and do it?
Right. So that determination of how it would be handled would rest with the underwriter. The underwriter might be able to then go through and make sure proper permits are pulled and pay for all that. And then either compensate, they might even just choose to simply compensate the homeowner with a check for the loss in equity to the property, or they might choose to go ahead and have it put in properly, whatever's going to resolve that issue, and the loss of equity to the home. So yeah, that would actually depend on what the underwriter would decide to do in concert with the statutes for the borough and for the township. And also, it may be this whole problem was triggered because there was some kind of a septic issue that arose because the second bathroom went in. So there was a lot of different things that the underwriter would have to take into consideration before deciding what the best path would be forward to make the homeowner whole again. Yeah, but the primary issue here would be the loss in equity to the property. That's
Well, I know that a contractor is going to charge you more to do all that work than what equity of an extra bathroom puts into your home.
Right, that could be. So another benefit of enhanced coverage as well is that we'll actually pay if the underwriter goes that route with monetary compensation. In a lot of instances, the enhanced policy will cover over 150% of the loss that's suffered by that homeowner. So that might be the answer to your question that you're looking for. Now, it's important to note that enhanced policies can only be issued to individuals. You can't issue them to an LLC or a corporation. And enhanced policies will not cover unimproved vacant land. There has to be a dwelling on that land for an enhanced policy to be issued. So in the situation of an LLC or a corporation or a vacant lot, a standard policy will automatically be issued for that purchase. So we want to talk about what a lender policy is. These are always issued at a closing involving a mortgage. So whenever a mortgage loan is taken out, a lender must take steps to protect their lien position in the property. If a buyer ends up in default, the lender needs to be able to have assurances that they're going to be able to foreclose on this property and take it back without any issues in title. So the lender title policy simply means that the lender gets to be first in line at the sheriff's sale, guys, in the event of foreclosure. And it also applies to refinances. A lender is going to request a loan policy for every refinance that is done. A lender's policy, when we have a home purchase closing, it's issued simultaneously with the owner's policy. Both the buyer and the lender then are protected from title claims, each having their own policy. And that loan policy is going to remain in effect for as long as that mortgage remains unpaid, okay? It's important to note for your client that that lender's policy does not protect the buyer. It only protects the lender and the lender's interest in this property. A buyer has to purchase their own owner's policy for title protection. And I would strongly, if I ever had a buyer that was purchasing a property with a mortgage and they, for some reason, did not want to get an owner's policy, I would need to sit down with them and talk about this because, they're letting the lender get protection against their foreclosure action, but they're not going to protect themselves. That seems really weird. So there might be sometimes education's involved with a client to make sure that they have their rights protected in this land. So what are some exceptions to title policy coverage? So just like with other types of insurance policies, there are certain exceptions that are not going to be covered by the title policy. So the underwriter would not pay out claims in certain instances. For example, if a homeowner was blatantly violating their existing easements or covenants and restrictions, and maybe they were violating their private maintenance agreement, that would be examples of exceptions to coverage where the underwriter is not going to pay out. Their homeowner also cannot use their covered residence for illegal purposes, like having a meth lab at the house, for any uses that are prohibited by their deed as well. So how do title claims ever get resolved? Well, the underwriter may, at their discretion, find the solution that works best to resolve the issue. As we discussed before, this could be monetary payments to the aggrieved party. It could be a simple quitclaim deed to relieve a third party of their interest and to make your homeowner's interest whole again. It could maybe result in the purchase of additional tracts of land to resolve a boundary dispute at no cost to the homeowner. The title insurer would take care of all this. It might even simply mean filing corrective documents at the county courthouse, tracking down a lost heir, and so on and so forth. And sometimes, interestingly, we find that the simple passage of time will also resolve a title claim. For an example, you might have a deed where a life estate is granted to grandma, and she is allowed to live at the property for as long as she is alive. However, grandma, maybe down the road before she passes away, she ends up going to a nursing home and the property is sold, but the life estate that allowed grandma to live on that property was never properly terminated. So it could be just with the passage of time, by the time that claim might pop up, grandma might pass away, and then, there is no more issue with the life estate because she is now deceased. So that would be an issue where the passage of time would resolve a potential title claim all by itself. And of course, we would need to see a death certificate for that individual who had the life estate so that we can make sure adequate language is addressed in a future deed to let all parties know that it's been extinguished, that interest in the land. Something I do want to touch base on also, it's very important. What is a quitclaim deed exactly? It's probably not what you think. I find that a quitclaim deed is confused with a regular standard warranty deed all the time. So a quitclaim deed will divest a party of their interest in the property. It does not take care of divesting ownership. What I mean by that is, here's an example. You have Mr. Seller, who is a married man. He owns a property all by himself as the sole owner. It's a rental property. He has a wife, we're going to call her Ms. Interest, who initiates a divorce action against him. She wants a divorce. So when Mr. Seller decides that he needs money to pay for his mounting legal bills, he goes ahead and decides to sell the rental property to Mr. Buyer. However, as you might have been aware from a few weeks ago when we discussed types of tenancy and the fact that Pennsylvania is a former dower and courtesy state, that spouse, Ms. Interest, actually may have had an interest in this property while she was married to Mr. Seller. So when Mr. Buyer decides to flip the property, his title company for his sale of it determines that Ms. Interest indeed might still have rights in the property, financial or otherwise, simply by being married to Mr. Seller back in the day. Even though she was never a titled owner on the deed, she might have an interest in this property, okay? So Ms. Interest later agrees to convey any possible interest or rights in the property that she may have acquired just by being married to Mr. Seller. She agrees to sign that interest away to Mr. Buyer by using a quitclaim deed. A quitclaim deed is appropriate in this situation because she was never a titled owner. We just wanted to make sure that any interests that she had in the property were properly resolved. She signs off on the quitclaim, and clear title is now restored to Mr. Buyer. Now, if Ms. Interest, the former wife, had been on the deed as a titled owner with Mr. Seller, a regular warranty deed would have been used, not a quitclaim deed. So again, a quitclaim deed will convey interest in a property, does not convey ownership. And the general public a lot gets this very confused all the time. So I wanted to take a minute to talk about the difference between a quitclaim deed and a regular standard warranty deed that we're all used to seeing. If you have additional questions on this, please come see me so I can further explain it to you, maybe with examples, other examples. I don't want to get too far down the rabbit hole with this because it's not the focus of our webinar, but I did want to bring it to your attention. So title insurance success stories. Any success story for title insurance that resolves a claim has three things in common. It reduces risks for the homeowner, it saves the owner from financial loss, and it also preserves the homeowner's rights over time. So here's our first example from the Fidelity archives. This is the neighbor versus motorcycle man. We have Harvey, who is a very happy new homeowner. He loves his Harley Davidson motorcycle above all else, and he would never leave this out in the rain, right? He always wants to keep it in his garage so it's not exposed to the elements. So inadvertently, some years ago, before Harvey became the owner, a prior owner actually built the garage 2 feet over onto the neighbor's land. So one bright and early morning, Harvey's neighbor Jack wakes up to the thundering sound of the Harley being all started up, and he suddenly considers the possibility that garage might be over the property line. So Jack contacts his surveyor, who confirms that the garage indeed does encroach on Jack's property. So Harvey's in a panic. He doesn't want to lose the garage. Jack is going to, draft a lawsuit, which is going to ask Harvey to take the garage down. So what happens here? Harvey finds that he does have his owner's title policy from closing. Oh, excuse me. Get there. And Harvey is going to, under the rest of the story, I'm sorry about that. Harvey is going to go ahead and file a claim with his title insurer. And the title insurer is going to determine that and have discussions with and mediate with with Jack, letting him know that we can take care of this by maybe purchasing a strip of Jack's land so that Harvey's garage does not have to be torn down. And Jack's a good neighbor, so he actually agrees to this and agrees to the cash payment so that there's the deeds get redrawn and Harvey does not have to rip down the garage. So it's a happy ending. Here's another story of Loretta versus the roofer. So Loretta loves her new house. She is very thankful for the fact that the seller replaced the roof on this property right before she purchased it. And much to her surprise, however, it turns out that the seller never paid that roofing contractor for the work that they did on that roof. The roofing contractor insists that he has a mechanic's lien or a construction lien against the property with which he could foreclose against Loretta's new home. But Loretta, of course, has a owner's title policy that she purchased at closing. It's an enhanced policy. And all she has to do is tender this entire problem to her title insurer, who will take care of the whole thing. The insurer will contact the roofing contractor and make sure that the claim, the lien claim is settled in full. And Loretta can sleep again at night, knowing that she doesn't have to lose any sleep over that contractor's claim. And if there's any questions, love to take those from you, either on camera or off camera. No worries there. We're always available to help you out with your title issues or potential title issues. And anything that we can resolve prior to closing naturally is what we're always working on behind the scenes. It's generally estimated that one out of every 3 files has some kind of an interest issue or a title issue that needs to be resolved prior to closing. So we're always very busy behind the scenes trying to clear any title issues to make sure that you guys have a smooth and wonderful closing. And if you do have any questions, let us know. Watermark is always very happy to assist you with all of your settlement needs. And you can send us emails at settlements@watermarklandtransfer.com or give us a phone call. So thank you so much for joining us today, everyone. Look forward to seeing you around.
Thanks, Jerry. Appreciate it.
You're welcome. Take care, everybody.